So you're now looking at setting a cash flow budget up for your business. Let's go through some sample suggestions for your business. Now, I can only deal with these in generic headings at the moment, but one of the specifics that you are going to be interested in is when we come down the bottom here, what you're really going to be interested in is that little bit in red called net profit. And what's suggested is that you build your business cash flow from the ground up, deciding what you want as your net profit, or the technical term is your EBITDA, earnings before interest, taxes and depreciation and amortization. But your net profit, you may want to have that as $100,000, $200,000, $1 million, $2 million, whatever it needs to be. And then working your way back up, you will have a fair idea what your expenses are going to be. Now, expenses can be including headings such as rent, insurance, bookkeeping, and business coaching, of course, and any other expenses that you can consider need to be just listed in there. And then we obviously want to have your, if you're a proprietor limited company, you'd want to put the owner's salaries, or it could be drawings that you're going to be taking out. So in this example here, what we can sell is our labour. Primarily, our cost of goods is broken down into two parts, and that's going to be our labour or our materials. And that will depend our cost of sales. We may have different labour inputs and different parts and material inputs, and they may correspond to our sales mix. So we start up here with our sales items, whatever they are, and they may have two components, those two components being the labour cost and the material cost. And when we come down to our cost of goods sold, we would break that down as to what is our parts and what is our labour cost to make our sales. That will in turn come down to our gross profit, and then eventually we work our way down through our rent, insurance expenses, whatever the expenses are. Coming down to the total down the bottom of salary, that will make a total of your total expenses, and then what's left over, which is the part that you're interested in, is going to be your net profit. Some of the considerations that you may want to have, and I've got a simple list here, and I'm not going to be able to get it right for all businesses, but in this example here it might be for a motor mechanic. Now, a motor mechanic could have expenses or sales income areas. They could have one for servicing, and they would obviously have costs associated with servicing as well. Another heading could be that they sell four-wheel drive servicing, and there would be a cost associated with four-wheel drive servicing as well. And that could be a labour cost, or it could be a parts and material cost. And part of the income was also going to be where you have an alignment for wheel alignments. But what happens if you're running a law practice and you might have income headings instead of that? Your income headings could be totally different, and you could have a heading up there for a will, and you might sell that for $1,000 or $500 or $2,000, or you might have an estate plan, or you might have an enduring power of attorney, or you might have an enduring power of guardianship. There could be any number of sales headings that you've got up there, but they will also likely have costs associated with those. So when you're dealing with wills down here, you'll have dollar costs in labour or materials that you need to be paying someone to provide those level of services. So you then start working down here, and again you're looking at what is your net profit and how is that being affected. So when you're setting your cash flow budget, you need to look from the ground up. Consider, what labour do I have available? What materials will I need? And then how do I budget for those? And we want to be budgeting for those on a monthly basis. So ideally, we want to have January, February, March, April, May, and so on out here to December. And then you look down at all your costs, you take them across here, and you start mapping out how much will I earn, when will I earn it, how will I earn it, and is it heading me towards my net profit target that you want to achieve on a yearly basis. When you're sitting down, you need to be identifying what the numbers are, working with your accountant. And here at the Business Doctor, we work with loads of different accountants, and what our job is to get the numbers uploaded so that we can review them every month. And typically you'll take an Excel spreadsheet like this, and the reason why it's done in an Excel spreadsheet is it gives you more flexibility to go back and review the numbers, move the numbers around, because it may be that some of your overhead expenses are too high, or it may be that we haven't budgeted enough with our labour. And by following a template approach using an Excel spreadsheet, we can then upload this to your accounting file, whether it be Xero, MYOB or QuickBooks. What it ultimately is heading towards is your revenue per month, and then we sit down and we review that once a month. I'm Jeff Miles of the Business Doctor, and if you have any questions, please send me an email.